So it has been a rather dramatic 24 hours in the UK, and because of that, it's been the topic of discussion around all the different forums and blogs. So what exactly has been happening in Britain? Well, like many things, what's happened in the past 24 hours has been a culmination of things that have been occurring for basically years. So it stems back to Brexit, but in essence then it's come forward. We've had the shocks through the system of the Ukrainian war. We've had the build-up for quite a while of housing prices, and then finally inflation has been starting to come through, and we're leading into the UK winter. People have been complaining that they're going to be struggling to heat their houses, that they're struggling to buy food, the price of petrol is up, the cost of living is up throughout the economy, which is basically saying inflation in general is a problem. So then on top of that, the new Prime Minister has come in and said that what she would like to do is give tax cuts, especially to the rich. And generally during inflation, what the markets want to hear is the government bringing back their spending, because that means that then there's going to be less inflationary pressure and less reason for interest rates to rise. And of course, if interest rates don't rise, the markets have access to cheaper money. So effectively, by giving the cut to the rich, they're spending money that otherwise the markets would like to have through lower interest rates. Now, when the markets, i.e. the trading rich people, say, hey, giving rich people, i.e. us, is a bad idea for a tax cut, and start to drop the currencies in the markets in general, maybe that wasn't the best policy idea. So anyway, that caused the pound to drop. Now, when a currency drops, that further increases interest rate pressure in the economy. And when that happens, bond prices need to drop to match the returns on those bond prices. So we had the bond market then dramatically drop. So even the long-term government bonds in England dropped dramatically. And of course, bonds are usually regarded as a very safe investment. And lots of the UK pension funds were holding bonds, and they have just plummeted in the past week or so. And then especially overnight, it was becoming quite a worry for the British Central Bank. So the Bank of England went into the bond market and began buying up these bonds to stabilize the price, which they have done. There's been quite a serious rally over the past day or so, 12 to 24 hours. Now, obviously, to buy those bonds, the central bank is creating money, or printing money, you might say. So that in itself, as well as inflationary. So while in the short term it has calmed the bond market and stopped the initial run that the pension funds in the UK were suffering from, it's kind of just kicked the can down the road a little bit, because what the economies are trying to do is control inflation, and what the Reserve Bank of England, the Central Bank of England, has had to do is print more money, create inflation to support the bond market in the short term. So how this all plays out, we're yet to see. But that is a brief summary of what has happened in the past few weeks in the British economy, which has led to that dramatic Bank of England action to stop the run on the bonds last night Australian time, or yesterday British time.